Good afternoon and welcome to the System1 Group PLC final results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I would like to submit the following poll, and I would now like to hand you over to CEO James Gregory. Good afternoon to you.
Hello everyone, thank you for taking the time to join us today. We should hopefully have a fun hour ahead. The plan for today is we'll cover off some highlights to start with. I'll then talk through an overview of who we are and our key results. I'll hand over to Chris, our CFO, who will go through the financial insights, and I'll finish up with opportunities ahead and any Q&A you may have. So with that, we'll jump into our highlights. FY24 was a great year and really delighted to be able to share some performance results with you today. We maintained our momentum. I think that was the key thing from last year. We've seen platform revenue up 43% on year and total revenue up 28%. There was significant double-digit revenue growth in the US, the UK, and in Europe, driven by 260 new client wins, and also underpinned by net revenue retention rate of 100% on our platform revenue. We increased gross profit margin to 87%, and all of that flowed through to adjusted EBITDA margin 15% versus 7% in the prior year, and statutory profit before tax of 3.1 million, which is 4x on FY23. Cash was great with 9.6 million pounds at the end of the year, plus 4 million pound free cash flow, and we have a proposed dividend of 5p per share. So with that, we'll dive into an overview of the business, and I'll start off by introducing myself. So for those of you who don't know me, my name's James Gregory. I joined the business in 2021 as COO and took over the role of Chief Executive Officer in December 2022. The opportunity to scale a digital business and joining a business that was primed for growth was the reason that I joined. And what I'm really proud to see is that that's coming through today. We will do a brief overview of the business for any new joiners today before kicking off into results. So we'll start off with why we're here. Our mission is to help the world's largest advertisers make confident, creative decisions that lead to transformational business results. We're truly customer focused. We know who our customers are and we know what we can do for them. And then when you think about the why, so what are the problems that System1 can help overcome? Well, firstly, we know that 51% of advertising has no long-term impact on market share growth. We know that 95% of new product launches fail. So that's why System1's here. Our customers are crying out for help and we're the only ones who can truly help. So we help marketers make smart decisions and carry out marketing that will lead to highly profitable return on investment. So who are we? We're a marketing decision-making platform. And what we do is we predict and improve marketing effectiveness. System1 delivers prediction methodologies that market-leading, repeatable, scalable products born from the Brain Juicer PLC IP. We believe we're the world's best at what we do, and we're delivering this to our customers. The way we deliver this is through 3 product offerings. Firstly, in the blue, we have our data. These are our Predicture or our automatically produced predictions. These are the market research insights you get into how your advertising, your innovation, or your brand is growing. Alongside that, in yellow, we offer data-led consultancy. These are the Improve Your. So this is the insights and the consultancy on those results you get from your predictions. And then finally, we have bespoke consultancy. This is something we've retained to attract and retain the world's largest advertisers. And the core offering that we see coming through is our data and data-led consultancy. We know this is where the world's large advertisers buy, and it's that option to be able to predict and improve. The way this is delivered is through a fully automated platform. This is something that's been built out over the last few years. And what this means is we've taken every step of market research that you can see on the screen here, from early stage setting up what you might want to market research, programming of a survey questionnaire, reaching out to a panel respondent to give you a response, processing that data and creating some insights in a report with translation into multiple languages and back into English, and then also project management alongside. We've now fully automated that process so that we can deliver an ad or an idea test within 24 hours. That used to take 2 to 4 weeks to do, and we have market leading speed in that space. Alongside that, once that report's been created, we then offer our data-led consultancy, where our team of expert consultants provide insights into those predictions. And where we do this is the 3 most critical questions for marketers. That is advertising effectiveness, brand effectiveness, and innovation effectiveness. And you can see them on your screen here with our test your ad, our test your innovation, and our test your brand offer. And all of these are built on a truly scalable business. So our platform and our products are based on world-leading IP, methodologies, and technologies. We're not a startup, we truly are a scale-up in this space. We've tested over 190,000 ads, brands, and ideas. Over 15 million surveys have gone out, and we've measured over 36 million emotions through our face trace IP across over 50 markets. We have a truly global service offering as well. We have 13 offices around the globe that allows us to understand locality, both from a sales and a delivery perspective. We can run tests in 81 markets, all the way from Sydney through to LA. Underpinning this is our USP, and that USP is taking emotion and translating it into business results, creating predictive outcomes for our marketing audience. You see this here at the top of the arrow. We're saying this is the tip of the spear in which we're able to engage with our clients. Alongside that, though, we do offer market-leading speed and price. Interestingly, customers are often feedback that while they love our methodology and our predictiveness, it's the speed that allows us to win. However, if we didn't have the methodology, they wouldn't buy somebody just purely for speed or price. You have to have the predictiveness alongside it too. And then underpinning our metrics are 2 things. It's the power of our SYSTEM1 thinking versus SYSTEM2 thinking. And this all stems from Daniel Kahneman's original thought that we've built out through Brain Juicer and into SYSTEM1. Alongside that, you have Zeltman's finding that 95% of decisions will be driven by the SYSTEM1 part of your brain. That's your emotional response. And the happier you feel, the more likely you are to take a positive action, which is what we see in all of our responses. So jumping into this year, as I said up front, it's been a super year and really proud to share the results with you today. That our platform revenue has driven top line growth. We've had 43% growth of our platform revenue, which you can see in pink on the screen, driving 28% top line growth. When you then break that down, what's brilliant to see is we've been able to deliver that on a quarter by quarter basis. So on the screen in front of you, you can see in blue the data. So these are those automated predictions, and the yellow, that data-led consultancy to provide insight into those predictions. And you can see that from Q1 last year through to Q4, this continued to grow throughout the year, growing from £4.9 million in Q1 to 7.7 in Q4. And although we're looking back at last year, we're actually looking to close out our Q1 at the end of June, and we'll be sharing more detailed information on this next week. And what you can see on here is we've continued to grow the business into Q1 this year on our provisional numbers. Now, Q1 last year, it's fair to say, was a relatively low number for us last year, but it's great to see we've been able to carry on the momentum we carried on from last year into this year. Underpinning this, a question we've had a few times has been around our net revenue retention. So how much of our revenue are we keeping year on year from our existing client base? And what's lovely to say is from the people buying our platform revenue products, 100% of that stayed year on year. So that's not to say every single customer will spend the same amount, but if you take the customer base and what they spent in FY23, we took the same amount of revenue from that customer base in the next year. And what's lovely with that is then you can see the new client revenue sits on top of it. And if we can maintain that as a model going forward, we've got a great opportunity to grow. Our biggest markets are the US and the UK. And what's lovely is that I can say we're growing in both. We work with 5 of the top 10 US advertisers and 7 of the top 10 UK advertisers. Unfortunately, we cannot name many of these for legal reasons, but if you'd like to take a look at this, they're all great advertisers and we're proud to work with the ones we do, as we would be proud to work with anybody on this list. And just to finish off my section, I thought it'd be great to hear from one of our customers. So you have Ben Case here, the Managing Director at Sky, Managing Director of Customer Strategy at Sky. He said, spending thousands on pre-testing our creative to make the millions spent on media work harder pays for itself many times over. And I think it's great to hear how our clients are using our products in that space. So with that, I'll hand over to Chris Wilford, our CFO.
Great, thanks very much, James. I've just lost my mouse. Yeah, good afternoon, everyone. Chris Wilford, CFO of System1. I'm pleased to report that last year was the first year that showed the benefit of our scalable platform growth model. And as James has mentioned, platform revenue was up by 43%, total revenue up by 28%. And efficiencies in our supply chain meant that direct costs, which is primarily the cost of respondents for our predictions, rose by just 6% on that 28% revenue growth. And that boosted the gross profit increase to 32% year on year. Total operating costs increased by 24% to 23.4 million. Due mainly to higher variable performance pay linked to targets. So within the increase in operating costs year on year, just under 3 million of that was variable performance pay. And profit before tax was over 4 times higher year on year from a low base, and earnings and EPS both increased 5-fold. And this chart shows pretty dramatically that growth in revenue is attributable entirely, really, to the communications product group, which includes Test Your Ad. And James will be talking later on about our plans to boost innovation product group in particular to emulate TYA's success. And we're encouraged also by the strong double-digit growth in the largest geographic markets, namely, and in this order, US, UK, and Europe. And the US performed exceptionally well in the second half of last year, and as mentioned in the press release this morning, has entered the current financial year with a considerable momentum and is the fastest growing region in the first quarter. And we'll be releasing more information on first quarter revenue when we close the books in June next week. And our key performance indicators are moving in the right direction. This is an update of a chart that I showed at the last Capital Markets Day, and it's a list of our key strategic performance indicators showing last year's actual compared with the year before. And for those of you who are interested in this, there's been a small restatement of the previous year related to how we account for one of our property leases for a property we don't occupy anymore. But its impact is not to change profit or assets. It just reduces EBITDA and reduces operating costs by an equal amount. So the strategic measures that we track internally moved in the right direction, and some dramatically so. Platform revenue at the end of the year represented 82% of all revenue. And to put that into context, 4 years ago, it was 0. So we've effectively built a new fast turnaround automated predictions business in 4 years that's now more than 80% of our revenue, and a current running rates is probably closer to 90. And it will continue to increase in the near term as legacy bespoke consultancy contracts roll off. And we also find efficient and repeatable ways to meet our customers' needs, just as we did last year with the launch of TYA Pro, which allowed us to effectively automate some features that could previously only be delivered with a complex bespoke workaround. Gross profit margin bounced up 3 points to 87% on the back of some supply chain efficiencies, including an API solution that allows us to onboard new respondent panel suppliers and increase competition between our suppliers. And we also managed to put some price increases through last year and the year before, which also helped margin. Now, we're not guaranteeing to keep gross profit margin rising above last year's level, and we're not even guaranteeing to keep it at last year's level because it is exceptionally high in our sector at 87%. But we aim to stay close to our benchmark, which is 85%. And as a result of all of this, adjusted EBITDA margin more than doubled in the year to 15%. And this is another measure where we're signaling a smaller rise, the margin, a smaller rise, if any, in the current year, which, relatively speaking, is a year of investment. Some of it catch-up investment, because we were very careful, particularly the first half of last year, in recruiting and incurring discretionary costs after a big net cash outflow the year before. Some of it catching up with higher volume last year. And we're also choosing to invest in growing the business. There's a lot of discretionary marketing, business development, and fame building investment in the current year. And we exceeded our Rule of 40 benchmark last year on the back of 43% platform revenue growth, and also generated 4 million of free cash flow to end the period with net cash of over 9 million. And this is an update of another chart that I showed at Capital Markets Day, but it's good to see that we have come out slightly ahead of what we were projecting then. And what this chart shows is 2 years ago versus last year, revenue in pink, the pink bars on the left, adjusted EBITDA, the blue bars on the left, and then EBITDA margin, which is the purple line. And on the right, I've shown the kind of mathematical relationship between them. So year on year, we grew EBITDA by 2.75 times, and that was partly because of volume growth. So revenue is up by 1.28 times, but more importantly, because of margin improvement, which was 2.16 times. And again, another updated visual from a previous version. But again, if we then look at, and this isn't a prediction, or certainly not a profit forecast, but it's something we use internally to challenge ourselves as to what might be possible in a business like ours if we run it well. And so we've imagined here in a scenario where we've doubled the revenue, and the numbers are nice and easy to remember now, it's from 30 million to 60 million. We've doubled the margin, EBITDA margin, from 15% to 30%. And the effect of that is to quadruple the EBITDA. And can't really say a lot more than that, other than it's something we aspire to and something we believe should be achievable in a business like ours. And we'll keep coming back to this as we report to you in future years. In terms of our strategic medium-term goals, we're saying that platform revenue should be between 90% and 100% most years from here on in, compared to 82% last year. So the middle of that range is 95%. Platform revenue growth at scale. So these are, again, this is a scenario-based, not a time-based KPI. But when we're double the size that we were last year, we may not continue to grow at 28, 30% a year, and platform revenue growth might not be as high as 43%. So we prudently assume that we'll be solid double-digit growth in this model, and if we do better, that's great. And as I referred to earlier, our benchmark for gross profit margin is 85%, and we've been at or around that for a few years now. And if we start to fall below that, then that probably means we need to increase our prices. And then adjusted EBITDA as a percent of revenue, we talked about that just now, but at scale, we'd like to be at or above 30%, and we'll do our darndest to get there. And then rule of 40 is 40% or more. That's the way the rule works. So if you had 10% revenue growth and a 30% EBITDA margin, you are a rule of 40 company, and we have been so for the last 2 years, I'm pleased to report. And then finally, the news today is we have declared the company's first dividend for 5 years. And there's just some things to be aware of on this slide. The kind of features of the proposed dividend are on the left. So it's 3 times covered by our earnings. It's within our 30, therefore it's within our 30 to 40% dividend payout policy range. We're saying that for the foreseeable, we're not going to pay 2 dividends a year. It'll be 1 dividend a year. We think that's more cost effective for a company of our size and shape. And the cash outflow associated with the dividend will be about £640,000. And then the timing of that, the AGM will be the 25th of September, the record date 27th of September, and the money will get handed over on the 18th of October. And with that, I will briefly hand back to James.
Thank you, Chris. So what I'd like to do now is to cover off some of the opportunities ahead before we get into Q&A. And I've seen there are, I think, lots of questions coming in on Q&A. We'll do our best to answer them all. So please do submit them if you haven't so far. So I think in our last Capital Markets Day and also in the annual report today, we set out 3 reasons to believe. And these are that we have a big opportunity in the innovation space, what we previously called idea testing. We have a massive opportunity in the US market. And then thirdly, we have a big opportunity to really win with the world's largest advertisers. So I'll talk through those before we close and go into Q&A. We'll start off in the space of innovation and really our total addressable market. So £129 billion is spent in total on market research. And the 3 areas that we play, there's $20 billion spent there. That's 2.46 in ad pre-testing, 12 in innovation testing, and just shy of $6 billion in brand tracking. And when you look at where we play in those spaces, we're under 1% of the total ad pre-testing market. We're a very small decimal of total innovation testing market, and similarly in the brand tracking space. But if you think back to our business model and back to Brain Juicer days, innovation used to be the core products that we offered and what we were very famous for. So what we've done this financial year is we've relaunched our Test Your Innovation offer, which you can see in front of you. And what we've done is we try to put the client and the customer at the heart of this. So we set out actually to evolve, not to revolutionize our product offering. And we start with what our customer wants. So in the first instance, I'll start off in the discovery space, trying to understand what within their offering is distinctive that they should be building upon. And after that, you move into the test your innovation space, when you might be looking at multiple concepts, multiple products, multiple logos that you might want to test. We would do our testing and then our guidance, our improvements on top of it. And you might flick between steps 2 and 3 multiple times before selecting on your final product or products that you then want to innovate and to get into the detailed description of. And then once all of that's done, our Test Your Brand offer will allow you to understand the impact on your brand before, during, and post that product launch. We're able to do this in a similar way to test your ad across multiple channels. So this could be brand positionings, concepts, product claims, product names, packs, and logos. And then similarly to our Test Your Ad offering as well, we can do it might be text only or text and mood board imagery, through to the late stage when you might have the full concept and any pack imagery that you might have. Secondly, then, we're going to focus on the US. And we've really strengthened out our go-to-market in the US based on the opportunity you have here. What you can see on the chart is that number I referred to beforehand, so £129 billion of total market research spend, the global insights industry in pink. And if you look in the US, you can see 55% of that, so 71 billion is spent there. And when you look at the proportion of our revenue from last year, FY24, that was 29%. So you can see the size of opportunity that lies in the total scale of the market, but also the proportion of our business too. As I mentioned, we've really strengthened out our go-to-market team in the US with recruiting people like Mike Perlman, our new Chief Commercial Officer, who's based in the US, running our global sales teams, but based from Boston. Alex Banks, who's heading up our US sales team. And also we've really increased our investments in our fame, in our media and in our partnerships. So for example, a partnership we announced today was with the Effies, and it'd be great to see that going full throttle in the year ahead. We've also spent to make sure that we support the full flywheel, including support across operational roles out in the US too. And then finally, the world's largest advertisers. So a couple of stats to in the charts as you look at them. So what you can see is on the left-hand side, we're saying that 13% of our clients buy across our Test Your Ad, our Test Your Brand, and our Test Your Innovation offering. And that results in 45% of our total revenue, which is super to see. So we can see here the power of those world's largest advertisers buying across our product groups and the impact it has. A statement that we did put out earlier in our release said that 2% of clients who buy across all three of these equal 13% of our revenue. And then when you consider our offering between our data, so our predictions, our data-led consultancy, so our improvements, and our bespoke consultancy on top of it, you can see that 40% of our clients who buy across these three, so be that our data and our data-led, or our data and the bespoke, result in 79% of total revenue. On the flip side, there are 51% of clients who buy data only, and this results in only 16% of total revenue. So I think for us, this is just to truly set out the opportunity that you have with the world's largest advertiser. And if you do win one of the world's largest advertiser into our business, we have the opportunity to scale them across our offerings, be it Test Your Ad, Test Your Innovation, and Test Your Brand, and also our Predict and Improve Your offering. And with that, I'd like to move to any Q&A.
That's great, Chris. James, thank you very much indeed for your presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the top right corner of your screen. While the company take a few moments to review those questions submitted today, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. James, Chris, as you can see, we have received a number of questions throughout today's presentation. And if I may now hand back to you, read out the questions where appropriate to do so, and I'll pick up from you both at the end.
Perfect. So if you take it, Chris, I'll take the first two questions we have on here because I think they sit nicely together. So the first question is, what are the management's hopes and expectations for net revenue retention over the next few years? And then alongside that, with 260 new client wins and nearly doubling the client base, what are the key factors that contributed to this success, particularly in the US market? So it's great for us to see the net revenue percentage staying over 100%. And I think in reality, our benchmark will always be to beat 100%. So what that means is, as we close out a year, we know that we are able to bank the revenue that was on the platform, and any new revenue will come on top of that. So that will always be our ambition going forwards. It's the first time we set out this metric. I know a few of you, even some of the names I've seen asking questions here, have been asking us about this previously. And it's one we'll be able to track and report going forwards. And then alongside that, I guess, understanding what allows us to win clients and double the client base and the key factors that contribute to this success. We've been really focused on executing our strategy in the last 18 months. We're really clear on who our client is. That's the world's largest advertisers. We're really clear what we can do for them. And that's that we can give them confidence in the creative decisions that they need to make. And the reason that they have that is because they can see the real business results, brand growth, profit, and cash off the back of the decisions they make from the predictions and the improvements that we give them. What we've done is once we've decided that that was the big area of focus and our big areas of investment will be particularly in advertising and innovation, and particularly in the UK and the US market, we've really tried to double down on our go-to-market. So what does that mean? That's about creating fame. It's about us being on a stage It's about us having new partners. And again, we've announced new partners with TikTok, the Effie's and other great brands out there. It's about us winning a great new client and them allowing us to actually be able to talk about them, because not many of our clients actually allow that. They like to keep it quite secret. And then once we've done that and we've won the new client and we've been able to bring them into the business, we need to provide great account management, which means that we can keep them, to keep that net revenue percentage high, and then we can reinvest that money back into the flywheel. And that's what we're doing constantly throughout the year and year on year as well. The next question then was, what areas are you planning to invest in FY25 to attract, win and retain customers, and how will these investments drive your growth trajectory? So I think what you've seen in today's presentation is that the model on advertising is working really well. Chris set out on his slide that most of the growth is coming from the advertising space. And when you talk about investment, we're doing two things. One is we're doubling down on that investment in the advertising space. So we're making sure that we can continue to grow that, and we expect most of our revenue growth to come from the advertising space this year. But we've also learned what works, and we need to then try and replicate that in the innovation space. So if you take what we've done in advertising that's been really good, we've created thought leadership through Orlando Wood's books. We have fame through John Evans's podcast. We're on stages. We have created great partnerships through the likes of LinkedIn, ITV over the years. So as we look into the innovation space over this year, we'll be focusing on our fame and our partnerships to set out that model, so we can then translate that into proper, fast revenue growth in subsequent years. We've also, I think, alluded to this year being quite a strong year of investment. One of the things we did last year is, as we closed the previous year, the results were fair. It's probably a nice way to put it. And we knew that we had to really deliver top line growth before we could invest in the business. So as we look into this year, we've talked about adding new heads back into the business, and some of those will be back office as well, as areas of the business have been running relatively hot, and we're looking to make sure we have the right level of support and discipline to allow the business to scale successfully. Okay, moving on. The next question was around February's Capital Markets Day revealed John Kieran was back in the UK working on strategic opportunities. Is that still the case? And what opportunities might actually exist beyond the current platform strategy? So yes, I'm delighted to say that John is definitely back in the UK and working on strategic opportunities. He's leading what we're calling internally our SYSTEM1 Futures, S1 Futures. So if you think about this, it's really setting out the future strategy for the 3+ years and onwards. It creates an opportunity for us to experiment and innovate, which are two of John's true strengths. And I work in partnership with him, along with Chris and others, to help review the ideas and the progress that's being worked on. So you take topics of the moment like AI, for example, how we're ensuring that our innovation product can be fit for the future, and also what other products might sit along our roadmap in the future. If you took the AI example, a great example of this would be where John's been working with natural language and understanding how it can help improve our quality of our products. With our products, we collect from our market research respondents verbatims, which is the words and the language they use. So we're able to use now AI off the back of John's exploration and innovation to ensure that we have high quality respondents on our platform and keep that level of quality super high. So it's a great example of where John's exploration has then been taken into the business to help us grow going forwards. Super. We'll keep going on here. So there was a question, so I maybe partly answered this one, a question around TYA being the key driver of growth for FY March 24. Can we share views for 25 and 26, and which of the 3 products or services will be the key driver of growth? And if for that to be true, what needs to happen? So I think I've mentioned already, we expect this year the core amount of growth to come from Test Your Ad. We had a stellar year last year. We launched our Test Your Ad Pro Plus product, which has gone down super well in the market and is actually our #1 SKU out there in the market to date. But we are investing in the future. So we need to make sure that that innovation product is as good, which we believe it is now. We need to make sure the marketing and the fame and the credibility is as high as it is in advertising, which it isn't yet, but will be. And then once we've got that, we will expect that to be sitting alongside advertising as an equal partner, if not a bigger partner of the future. And I think the brand has a great opportunity for the business, but will probably be sitting there in support of both the advertising and innovation offers. Chris, would you like to take the one on
Yes,
staff?
I'll take this one. Yeah, the question is, what is the staff situation compared to 4 years ago? The business used to have high caliber client teams. Just scroll down. Assuming the numbers of consulting staff has fallen with the move to automated processes, what's happened to them? Can you tell us something about the numbers of staff in different roles across the organisation and how you see this developing in the medium term? We'd be delighted to. Well, there's a note to the accounts that sets out the split in FY24 in terms of the average number of people on headcount in that time, and there were 46 in sales and marketing, 44 in operations, which includes the researchers. It's primarily the researchers, 31 in IT, including IT development, and 23 in admin, which includes 8 board members, most of whom are NEDs. By the end of the year, it was higher than that. So how has that changed since 4 years ago when I joined the business? Well, the number of people in sales and marketing is up by between 75 and 100%. So we've really invested in the top of the funnel, winning and retaining customers. Operations is lower. So we'd have had about 50 researchers in 2019-20. And we had high 30s for most of last year. And I'll come on to the future in a minute. IT is higher than it was, but it's been static for the last couple of years. And admin, well, hasn't moved a lot. It might have gone up a little bit, but not very much at all. So if we look forward, and I think we've it's not in this year's deck, but previously we've put up a little chart above those 4 indications next to those 4 staff areas, or which ones will grow a little bit but not very much, which ones will grow more. And we've been really consistent that sales and marketing, and sales in particular, will continue to grow as we grow the business. We have said that research and guidance will grow. With research and guidance, it's more nuanced because it depends on what the customers are buying. If they're just buying predictions, then you don't need many researchers. But when you look at the stats that we've just published, you'll see that actually the data-led consultancy has grown really well, and it grew really strongly in the second half of last year, and it's a very popular product in the US. Therefore, the needs of the customer say that we will need to hire some more researchers. We've already hired some researchers this financial year. So you should expect that to go up a bit. Sales and marketing will go up as well in the current year. So James referred to 20 positions that will be filling or have already filled. And pretty much all of those are in sales and marketing or in research and guidance, and 1 or 2 other niche positions elsewhere in ops, for example. But that's the focus. It's making sure that we can continue to recruit and onboard valuable new customers, and then properly serve and maintain them and grow them indeed, which will lead on to another question once we've won them.
So, Chris, I think the next question was around dividend as well.
Oh, yes.
If you're okay to take that
let
one,
me
please.
take that there. Dividend. Why are we paying only 1 dividend a year, not 2 like most other people? And it's 2 reasons. I mean, it's just simpler, and we're still a really small company, and just the admin cost and the regulatory processes around declaring a dividend seem to us to be not entirely worth it. And it's not as if people will be buying us only for the dividend. The yield isn't going to be that high because we're still investing in the business. So we're primarily a growth stock, but to buy shares back is very difficult for us, as anyone who's trying to buy shares this morning will know. Even when the market's not on fire as it is today, it's just really hard to get hold of stock. And so buybacks are not not an easy alternative for us at the moment. So those are the main reasons. It's simple to do, and also where you have an interim dividend and a final dividend, the amount where the interim dividend is pitched can create a lot of noise and speculation about what the board is signalling and what it means. And quite often that is just noise, and it just creates a distraction from what's really going on in the business as opposed to how you slice the pie and distributing excess capital.
Thanks, Chris. I'll take the next one on innovation, and Chris, maybe you're okay to look at the one on ASP, please, while I answer that.
Yeah.
So the question on innovation was, how soon could the relaunch service reach the revenue level of comms? How likely could innovation revenue reach it purely on cross-selling from existing comms clients? So I think I've kind of alluded to the fact that I would expect innovation as a bucket overall to grow this year. It's been declining year on year for a little while, and last year was the first year where we were able to retain it relatively flat year on year. Going forwards, I think there'll be marginal growth this year, but really we'll start to see high percentage growth from next year onwards. And the challenge then will be for us in terms of how fast we can make it grow. When you look at the comms products, it's been growing at sort of 30, 40, 50% year on year. So to do that, and if that carries on growing at that level off a higher base, innovation will need to grow even faster to catch it up. But we think that it can definitely have legs to be growing fast from next year onwards. On the question on cross-selling from existing comms clients as well. So when we talked slightly earlier about the number of clients who buy them all, at the moment, 8% of our clients are buying innovation and comms, which equals 24% of our total revenue. So we do have history of it. It's not always the same buyer. Sometimes the person who's buying innovation might be someone in the insight or the product development function, whereas the person buying advertising might be in the marketing function. But what's great is when the business starts to understand the language and we use the same fluent language across our products. So for example, a star score being used in advertising and also being used in innovation means it's really easy for the business to engage and take it on going forwards, even if it is a slightly different team who are buying it. So we'd expect that there will be some cross-selling that can happen, and there will also be some new clients who are going to win new on innovation who would like to sell the advertising products to in the future too.
Yep. Question here. Can you comment on ASP, please? Last year you had 23.4 million on circa 300 customers, indicating ASP of 78k. For FY24, you've 130 new clients with incremental revenue of 6.6, suggesting ASP 50,000. I appreciate timing of new contracts, rev rec, etc. But did ASP reduce in 2024? Thank you, George. Well, if you look at it a different way or simpler way, yes, I recognise the 78,000. That's basically the revenue in FY23 divided by the number of clients, and the equivalent figure for FY24 is 68. So on that basis, it did decline. Would I read anything into that? Not particularly. It's not a metric we particularly look at in the business, because the more successful we are recruiting low cost to service, sort of high velocity clients, so people who might just test one ad a year or one every 2 years, they're cheap to serve, it's profitable. And we know they're not going to come back month after month. By definition, it's a function of the strategy that we brought in 2000 that would happen. So yes, it's correct that the revenue per customer has gone down year on year, but that's been a pretty consistent trend. And not something we're concerned about at the moment.
Yeah, and I think just to build on that as well, Chris, what we do is we have a tiered service offering in terms of the size of our clients too. So our strategic clients, so the world's largest advertisers who are spending over a certain amount or who have the ability to serve that, we make sure that we're sort of looking after them and providing them that excellent account management that just beholds the amount of opportunity they can provide to us. And as you said, Chris, if there's then a smaller client who we can offer great service to, but in a much more time efficient way, They'll still get wonderful predictions that are really predictive, great world-class consultancy on top of it, but it might be in a more sort of, as you say, a simpler and more transactional way in that space.
Yeah, and to be sort of more constructive, I'm not saying ASPs are a terrible measure. It's a great measure for a subscription type business. But for us, probably more relevant to us is the net revenue retention, which James has taken us through, which is basically the cohort of customers that we had for FY23. Their average revenue did not decline year on year for platform. So one reason the total might have declined is the decay in the bespoke business, which is expensive to service and which we do charge a lot of money for.
Thank you very much, everyone. I think that is now the end of our questions. There are a few comments that people have given to us, either from the presentation or for the questions. So we'll take those on board. Thank you for your feedback. If anybody does have a final question, I guess now's the moment, or if not, we'll look to close.
That's great, James, Chris. Thank you for addressing all those questions that came in today from investors. And of course, if any questions do come in, the company can review all questions and we'll publish those responses on the Investor Meet Company platform. But before we direct the investors to provide you with their feedback, which I know is particularly important to the company, James, could I please ask you for a few closing comments?
Sure. So thank you so much for taking the time to join us today, whether you're listening live or on record. I'm really proud that we've maintained momentum. We've driven platform revenue growth over the last year. Our growth model, which we talk about internally as our flywheel, is really, really working. We're really clear on our proposition and platform. We amplify it through fame. We're winning new business. We're retaining the customers, and then we're reinvesting the upside back into the business to keep the flywheel turning. And as I said earlier, we've got some great opportunities ahead. We're really excited by these. So thank you, and look forward to speaking to you all soon.
James, Chris, thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order that the board can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SYSTEM1 Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.